Hello, beautiful beings. Welcome to our beta version. If you are new here, my name is Elizabeth, and today we are going to talk about some asset classes that you can invest in. In the previous videos, we spoke about your investment plan, and we also spoke about some technical jargons that are used in investment. And today we are looking at some types of asset classes that you can actually invest your money in. The first asset class we are looking at is cash. And cash is, I think, the most common, and everybody or most people invests in this asset class. Now, when it comes to cash, cash is fairly safe. It's one of the safest asset classes, and as an investor into that class, you know exactly what interest you are going to earn if you are with a provider that gives interest. And interest in most cases is guaranteed. So you find that you put your money, for example, in a money market, and that provider of that money market already at the onset indicates you are going to get 6%, for instance, interest. It's guaranteed and it's communicated in advance. Now, the downside of this asset class, when you have your money in cash, you barely beat inflation. So that is the only downside. But besides that, it's one of the safest, and you are guaranteed that you will get your interest as promised by the provider. Then the next asset class you can consider putting your money in is bonds. Bonds are either issued by governments or issued by large companies or large corporations. This is used as a way of them to raise money so that they can fund their operations. So basically they are saying, Elizabeth, give me a portion of your money so that I can fund my operations or development projects, and I give you this certain amount of interest for the money that you have given to me. Bonds are considered generally safe, especially when you are looking at bonds that are issued by governments. It's one of the safest investments, and your interest returns are also guaranteed. At the end of your investment into bonds, you have gained your interest, which usually is paid periodically depending on how your bond is structured, and you also get back your principal amount. So in the end, your chances of losing your money are very low when it comes to bonds. Personally, I would say bonds are actually one of the best investment asset classes. For instance, if you are close to retirement or you are about to retire, bonds are actually the best, some of the best places to put your money, because from certain ages you don't want to put your money into aggressive investments, or very risky or very volatile investments such as the stock market. So it's actually a good idea as a pensioner or someone who is close to your retirement to put some of your money into bonds. You have your interest rates, which are guaranteed, and you are paid periodically, so you have income, and at the end you also get back your principal amount. So in the end, you don't lose anything. And the interest rates for bonds are usually higher compared to the interest rates that you get on cash. So for example, your money market will not give you most of the time the same interest that you get from your government bonds, for instance. Then we have stocks or shares as an asset class, and this is when you invest in owning a piece of a company. So through a stockbroker, you buy pieces of different companies, or you buy pieces of different exchange traded funds, and you own those pieces. So you own shares, or you have ownership in those companies. Now, when it comes to stocks are some of the investment classes that can provide you with the highest returns. There is no cap in terms of how much stocks can grow. However, because of volatility and market conditions, your stocks can also dip to a point of no return. So it's a risky investment in most cases. And of course, ETFs are less riskier than individual stocks, but in terms of growth, you have no limit for up to how much a stock can grow or up to how much an ETF can grow. But the opposite is also true, that the movement can also move in the opposite direction and you might end up losing your money. Stocks are bought and sold on the stock exchanges, and some of the most common stock exchanges are your New York Stock Exchange, your Nasdaq, and one of the most common in Africa is the Johannesburg Stock Exchange. But different countries, of course, have their own stock exchanges. Some are quite small, but I think those are some of the New York and Nasdaq are some of the most well-known or most common stock exchanges that you want to buy your stock. And of course, like I said, you buy through a broker. So find a broker that meets your needs, and that is the one that you use to buy your stocks. Okay, and also when it comes to stocks, you have two types. You have common shares, and common shares are, like the name says, are the most common type of stock, and this allows owners to have voting rights in shareholder meetings. So if you attend a shareholder meeting and you own this type of stock, then you have voting rights. And sometimes you may also receive dividends of the company's profits. And like I said, dividends are not guaranteed, but when the company decides to pay out a dividend as a common stockholder, you are one of the shareholders that will benefit from the dividends. Then you have preferred stock. Preferred stock holders usually do not have any voting rights, but they have a high claim to the assets and earnings. Preferred shareholders are usually paid dividends before the common shareholders are paid dividends. With the stocks or shares asset class, as an investor, you benefit in form of dividends that are paid out by companies that you own a piece of, and you also benefit from appreciation of the money that you have put in your stocks. So those are the two types of ways that you benefit from investing in stocks. And like I said, the growth of stocks, there is no limit to how much they will grow. So the chances of you getting great returns is very high. However, there is also risk of volatility and risk of stocks that are falling and that might not be able to come back up. As a long-term investor in the stock market, you actually don't need to be checking your investment platform every day or every other day, because your focus is long term. Your focus is not right now. You are not a trader, you are an investor, and you are looking at the long-term picture. So though you do not need to stress yourself by looking at your investment platforms and looking at how the shares are performing every single day, and then you start panicking and whatnot. Stocks will always move up and down. However, history has proven that stocks, when you look at them at a long term, they always go up. There's always growth. But if you are looking at day to day, you might get discouraged and think that your capital is not growing or your money is not growing. Then we have exchange traded funds, and like I said in the previous video, this is one of the asset classes that I personally like, because when it comes to exchange traded funds, you have a pool of investments in one basket and you own a piece of that basket. For example, if you own the Total World ETF, you are owning companies from all over the world, a piece of that basket of companies from all over the world. So basically, in terms of diversification, you are well diversified. If one country is not doing well or one region is not doing well, then you have the others that are doing okay. So your whole basket does not collapse. Now, ETFs can invest in different industries. For example, you have your tech stocks, you have your medicine-related ETFs, you have ETFs that are in the fields of agriculture. So basically, they can invest in different industries. You also have ETFs that tracks the performance of different index. For example, the S&P 500. You can have an ETF that tracks the performance of the S&P 500, and your returns on that ETF is mimicking the movement of the 500 largest companies in the US. ETFs are traded throughout the trading hours, just like individual stocks, and they are one of the best asset classes for you to really find diversification. So you can own different types of ETFs based on geography, based on industry, based on commodities, and all of that. So you have basically a whole lot of options when it comes to what you can put your money into. Another thing which is good with ETFs is that they are low fees. They have low fees. So in terms of what you have to pay to hold that ETF, it's relatively low compared to mutual funds and index funds, because with the mutual funds and index funds sometimes you also have minimums. But with ETFs, because they are trading like stocks, you are able to buy for the smallest amount that the platform that you are using or the broker that you are using can allow. For example, you find a broker that allows you to buy for as little as $5 or as little as $10. So you own a fraction of ownership of that bucket of investments. Even if you only put in a 200 a month or a 200 however often you are able to, you own a piece of that basket. And the more the basket does well, the more your piece is doing well. Then we have mutual funds. Mutual funds are similar to ETFs. I think most of the things that I mentioned on ETFs are similar to mutual funds, except the fact that mutual funds are actively managed. They are actively managed, and you have a fund manager that you have to pay fees to. And sometimes these fees are high because you are paying for these professionals to manage your money on your behalf or manage your investment on your behalf. And the other thing also is that with the mutual funds, they are not traded as stocks or as ETFs on the normal trading hours through the day. They basically wait for the day to end, and that is when the transactions or the allocations are happening. So that is one of the differences. You can also not buy or sell yourself. You have to put in an instruction with your fund managers, and then they will do that on your behalf. So there might be delays. When you are investing yourself with a broker, you are able to invest at a certain time, but through the day. But because now with a mutual fund, you have to wait at the end, the prices might have changed through the day. Then we have commodities. Now, commodities are basic goods. It can also be raw materials that can be bought and sold, and this is often done in bulk. And this can be your tangible resources such as gold, silver, oil, or any other agricultural product. When it comes to ETFs, you also get ETFs that actually are investing in commodities. So you can invest in a commodity ETF such as gold and others. Then the last one that we have is real estate. Real estate is one of those most common ones. And you notice that among young people, especially when people are starting working and all of that, everybody wants to own real estate. Everybody wants to own a house. People want to lock in their mortgages and all of that. So in terms of property, you can invest either in commercial property or you can invest in residential property. But you can also equally, through the stock market, you can also buy real estate investment trusts, which is also referred to as REITs. So REITs are like ETFs that are actually traded on the stock market, and their main investment is in property. Now, as an investor in property, you can benefit in three ways. You can benefit from appreciation. You can benefit from rental income. You can also benefit from dividends, because like I said, you are also able to buy REITs on the stock market, and REITs are required by the law pay out a certain percentage of their earnings as dividends to their investors. So there, the dividends are more or less guaranteed. So we have looked at 7 different asset classes. So tell me in the comments, which of these asset classes are you invested in? Are you invested in cash? Are you invested in bonds? Are you invested in mutual funds? Are you invested in ETFs? Are you invested in commodities? Are you invested in property? Which ones are you invested in? And which ones are your best performing and which ones are your least performing? So share with me in the comments, and don't forget to like and subscribe to the channel, and I'll see you in the next one.